Let's get back to what will go a long way to dictating what happens, not just in terms of market sentiment, but in reality, what will happen at the FOMC's next meeting. To get us across all you need to know, Peter McGuire from XM joins me now. Hi, Peter. Welcome. Nice to see you this morning. Not a great week on Wall Street last week. There were a lot of economic data points really culminating with that non-farms report. How did you read it?
Well, good morning, Nadine. I think it hit the market by a little bit of a surprise. The realization was we were looking between 100 and 200, 100,000 and about 200,000 as far as, expectation, coming in very soft, 142,000 under that 165,000 as far as what the expectation was. So that really showed us structural weakness. July also was downgraded or revised down to 89,000 jobs. So this is a concern moving forward. And when you listen to the likes, Nadine, of Governor Chris Waller and Fed President for New York, John Williams, their whole focus is very much on undue damage to the labour market. And is this going to be momentum moving forward up to the 18th?
Okay, so we have inflation data still to come as well in the United States. So do you think that, how do we read that in the context of the FOMC and a potential 50 basis point cut?
I'll answer the first one. 50 basis points, I think that's about a 45 to 50% probability, and it'll probably rise over the rest of the week. So I think that's where they'll be playing, but the jury's still out. We've just got to see how it rolls. The next part you've got to worry about, as you mentioned, all of these concerns from a stickiness as far as CPI and the impact to inflation. I've got to say that with very, very cheap, relatively, energy prices, well, I don't know. It's just a big thank you compared to if we were running at $100 for crude. So all of those concerns are going to be, I think, considered. And this is where we roll. Also, the ECB, and you've got naturally other central banks doing similar decision-making processes over the rest of this month and into October.
Yeah, we're just looking at Brent on screen right now, Pete. Down around 14-month lows. What could potentially change this trajectory? Because we don't expect to see really big stimulus coming from China anytime soon. Yes, OPEC Plus has said that they won't be adding barrels into the system as planned in the next couple of months. But even that really hasn't moved the dial when it comes to the price.
No, it's been structural weakness over the last couple of months, Nadine, and that's just been a downdraft as we've all experienced. So it's the time to be short was, over the last, say, 3 to 4 months. What's going to turn it around is probably one thing, and that it would be geopolitical uncertainty if something was to erupt over the next matter of months. So I think that's what everyone's, from a trading perspective, are mindful of. And if that is to be the destabilizer, then it's just, war premium be built in and so on. So I'm not calling that, but that's always from an oil trading perspective, what you've got to keep an eye on.
All right. From commodities, let's go back to central banks because we do have on the 19th, the Bank of England, the BOE meeting. Yeah. What are the big signals they're telling us in terms of the jobs market, inflation? Because I do believe the BOE is expected to remain on hold.
Yeah, well, this is what I think the suggestion is, and that's what most analysts are realizing. But again, labour market, what's happening as far as growth internally in the UK, Nadine, and all of that positioning, it may not happen. You may not see a rate cut, as you said, in September, or it might be pushed out further to November, and we'll see what happens with the ECB and naturally with the Fed. So this is where it's all rolling, but you've also got that unemployment number is starting to edge down, and this is a consideration that every trader needs to be conscious of, and the impact that naturally rolls across to policy and the value of the pound and so on.
All right. When it comes to China, talk to us about the data that we're expecting and whether or not that will move the dial at all, likely when it comes to expectations for the Chinese economy, which is anemic at best.
Yeah, it's very soft. You got that CPI and PPI data, so they're the first part, the first and second cab to jump off the rank. Where it's rolling, Nadine, you've got basically structural weakness across the fabric of China. It's going to be a tough, hard grind forward. You've only got to look at the CSI 300, how it's, that 3,300 sort of handle. It's just, been a continual sell-off. You're not going to deal yourself out of, a 90 million housing issue as far as uninhabited properties, the overhang of that and the debt structure associated with it. That just doesn't roll out in, a weekend. So there's the first part. The second part is it's going to be, stimulus internally. And these are all expectations, I think, that, traders are looking at and how China is going to move forward leading up to Christmas.
All right. Pete, just one last question from me. Bitcoin, is it just following investor sentiment generally, you think?
Oh, Nadine, it's been an almighty rally from 16,000 up to 72. It's given them back a fair bit of hot air and it's sitting at 54. I think its best days are ahead of it. I'm not too fussed about it. It's very, very volatile. The ETF situation, there's certainly big attraction and you've only got so many coins that have been issued. So I think, at the moment, hold on and hang on, because I don't think the volatility is going to stop, and the chart really demonstrates that over that window of time as far as US. A 1 year window. It's a wild ride, but plenty of people enjoy it.